Hello and happy Wednesday. Welcome to another exciting edition of Rate Desk. I am your host, Michael Thomas. Today is April 29th. Let's dive right in. We had Fed Powell come on today and making a few statements. Nothing that came as a big surprise. A lot of it was reaffirmations of things that he said previously. But, I thought a good point that he made was that low rates are not going to necessarily spur economic activity. Other things need to spur that activity. Low rates certainly help it. Higher rates would be a real problem and a hindrance. Luckily, we're in a very low interest rate environment, and the Fed remains committed to that as we move into this recovery phase. So I thought that was very positive. The indices are up today. Dow Jones, NASDAQ, S&P 500, those are all up. U.S. Treasury yields are range bound, trading in between the 61, 62 basis point range today. We have seen some lowering on the interest rate quotes today. So the 223F has come down to 255. That's 10 basis points lower than yesterday. So that's definitely a lower quote. And on the 40-year fixed rate debt, that's 3.20. That's 320. Wow, those are really, really, really low rates. Jumping over to the agency desk, the Fannie Mae DUS rate is quoting at around 3.19 today, 3.19 for 10 years. Freddie Mac has actually come in lower. So they're 10 basis points lower as well. So they are down to 3.40. That is 3.40. So tightening and reduction really across the board for interest rates on multifamily today. That is good news. A couple things I want to just mention and talk about today. I guess first and foremost on my mind is this concept of when there are operational challenges or when there are challenges around the financing, that don't be the ostrich putting your head in the sand. These are the times that you really need to get in touch with your lenders and have very direct, very open communication. Even if you're busy and you have to set a call for later, make sure that as a borrower, you are communicating with your lenders, particularly if you are experiencing problems at the property level with higher collection losses or vacancies. Just make sure that you do communicate with your lenders. That is very, very important. Next, I want to mention that Fed Powell talked about the flow of credit, and how critical and important that is in the markets, which is why they've done so many things to provide that liquidity. I will say that the multifamily flow of credit is still good. The Freddie Mac, Fannie Mae world, and also the HUD world. And in addition, there's even some bridge lenders out there. I just read a notice that a property was sold, about 1,600 units in Dallas, and it was placed on a bridge debt. Sounds a bit like a value add play to me, because they mentioned in the notice that the borrower has 100% funding of some capital expenditure repairs. Usually that's included in a value add play if you're on a bridge loan like that. So that's great news. That means that not only do we have access to liquidity through these permanent financing sources, but even the temporary sources like bridge lenders and multifamily are still providing that essential flow of credit. That's all good news. So I want to, share again that communicating with your lenders are really key points. The flow of credit remains strong in multifamily. Make sure you tap that access, and also that the economic activity really comes down to the individuals and your businesses. Low rates certainly help, but we still need folks out there doing what they do best: buying properties, selling properties, improving properties, building properties. Okay, so that's my note for the day is stay at it. Credit's out there for you. Rates are at an all-time low. And come back and see us again tomorrow. This has been another episode of Rate Desk with your host, Michael Thomas. Thanks.